We'll move on to the next session. We have a fireside chat now on investment in companies that are building for the world from India. And I would like to invite for the fireside chat our very own Nishith Bhai. So Nishith Desai, founder Nishith Desai and Associates on the stage. And to carry on the fireside chat, we have Mr. Rajan Anandan, MD Sequoia Capital. Thank you so much for being with us.
Everybody's awake here? Good morning. It's good afternoon. Okay.
Everybody's trying to sell Priya their house so that she can move here.
She wants to move to India, so I think...
I think that would be huge, actually. Priya moving to India would be like a single biggest outcome of this conference. I think, or maybe Silicon Valley Bank should be like Bombay Bank now.
That's true, absolutely, I think. And Priya won't mind paying up exit tax in the US,
Of course, why not? You can pay angel tax here, pay exit tax there.
She has too much money, banker, no? Anyway, so Rajan, wonderful to have you here. Thank you so much. Let us start on a introductory note. Everybody knows about Sequoia, right? But what differentiates Sequoia from other funds? Okay. And second question is that Sequoia has never seen funding winter. Okay. And how do you see things around, So if you could make some comment, and later on I would want to also ask you about yourself. But first, about your institution.
But firstly, thank you for hosting Nishith. I think IVCA couldn't find any other speaker for you to moderate, so they called me last night. But thank you, Rajat, for getting me here. That's one of the things you have to do when you're on the executive council.
I'm the only person.
They give you desperate calls. You have to show up. But wonderful to be here. Thank you for moderating. Look, Sequoia is like any other venture capital firm. At the end of the day, in this business, it's a very, very competitive business, Nishith, as you know. And at the end of the day, you have to demonstrate over a long period of time that you can deliver returns. That's why your limited partners invest in you. And you have to demonstrate to founders that you can really help them build enduring companies. So this is Sequoia's 51st year. We were founded 51 years ago by Don Valentine, and I think we've been very fortunate over many decades to be able to do both of those things, right? Deliver strong returns to limited partners. By the way, it wasn't always easy for Sequoia. Right. Sequoia's first fund was a few $1 million. Yeah. Fortunately, 1 million of that went into Apple. The first $1 million into Apple, so that helped. And over the years, we've been very, very fortunate. And
so that bite in Apple is Sequoia's bite, looks like.
Hello, everyone in the back. I request you to please sit down. We're getting a lot of disturbance from behind, so if I can please request everyone to grab a seat, just a couple of more panels, and then you're free to network. Thank you.
Please tell them.
Last panel. I did tell Nishith that it's unlikely we will, actually this is quite a remarkable audience, because we thought everybody would be in the back having coffee.
I think so, yes. I think one thing to bear in mind is that lawyer is talking, he's not charging for that today. So
this is very special.
Yeah, very special, absolutely.
So now they're all leaving, they're going outside. This is even better.
I think they will soon come back.
Let's hope so.
Anyway,
so that's I think the short on Sequoia. I think in terms of there is a, by the way, India last year had $25 billion that came into our ecosystem. So I tell my friends, especially in media, if $25 billion is a winter, and a decade ago India only got $1 billion per year, this is a pretty good winter.
Yes,
we certainly don't want a very hot summer like 2021, because that was quite painful. Too many companies' valuations were
constructive dissatisfaction.
Yeah, exactly. So I think look, it's a great time, Nishith. There's never been a better time to invest. There's never been a better time to build. Okay, so if you're an early stage founder today, the seed market is very active. The panel before us, I think the investors talked about that. The venture market, the Series A market is very active. I do think if you're a growth stage company, there are two things, right? The best growth stage companies have raised a lot of capital. They don't need to raise. And if you're a growth stage company with broken unit economics, you're finished. So either you fix your unit economics and maybe you'll be able to raise, or you're going to raise, or you're not going to raise. So I think it's actually a very healthy thing. We go through these cycles, and this is a very healthy cycle for the ecosystem.
Yeah, when there is downturn, that makes you a little humble as well.
Absolutely, everybody.
And tell me a little bit about yourself. I know you, we all know you, but I think it would be wonderful to hear from you. Been with Microsoft, of course. Chat GPT is becoming now, they are going to replace lawyers very soon. But those kind of things coming up, you went to Google, so Sequoia. So tell us a little bit about yourself.
No, I mean, my short story, Nishith Desai, I'm Sri Lankan, born and raised in Colombo. Went to the US to go to college, and then worked at McKinsey, Chicago for a long time. I moved to India with Dell. I used to work for Michael Dell. So actually before Microsoft, I ran Dell in India and then worked for Microsoft, worked for Google for a long time. And I was a very active angel investor. So I think a bunch of folks in this room, I co-invested with as an angel. And I'm seeing Sanjay Nath at Bloom here and many others who I was fortunate to invest with. When I was an angel, I'd invest in their companies. And then about 3.5 years ago, I joined Sequoia. I lead Sequoia's seed business. So anything that's less than $4 or $5 million is called seed at Sequoia. And I'm fortunate to be at Sequoia kind of working with that team that invests in seed companies.
I can see some traits of Marvin Bauer, who is my most favorite personality and author, McKinsey founder, and in you as well. So
Gosh, that's like the best compliment ever.
Yeah.
But I'm not even a shade of Marvin.
Nice traits I can see, and I think having done so much, you've been so humble and so nice, amazing that, you know. Tell me, how do you see overall environment in India? We always, when you're inside, you know, you always think you're big, you're great. But how do you see world is looking at India at this point in time? And what are the sectors where you think there are opportunities which can take India global? India domestically will always be a great market and all that is very good. But what kind of companies can go global, you know, from India, where people should be focusing on? You've got tremendous experience, AI to deep tech, whatever.
Yeah, I think yeah, it's a great question. So firstly, I think there's a lot of optimism, Nishith, as you know, about India more broadly as a nation. I mean, we see that. McKinsey, by the way, never says it's any country's century.
Yeah.
So when the McKinsey global managing partner says it's India's century, first I called Gautam, who runs McKinsey in Asia, and said, is this century or decade? Because, you know, it's been India's decade for many decades. Hopefully this will be the decade. But they never say century. Because when you say century, it has to happen at least in one decade.
Yeah.
You know, because there's 70 years left.
Yeah.
One of those decades have to be India. So I think there's a lot of optimism about India because the demographic dividend, because of the fact of China +1, etc. But when it comes to the tech ecosystem, I think there's just extraordinary optimism, right? I mean, Google committing a $10 billion digital fund. You know, Amazon's, I think, invested well north of a $10 billion, etc. So you can see that from the global tech MNCs. But when it comes to the startup ecosystem, I think what we're seeing today is really this extraordinary explosion of opportunities, cutting across almost every sector in India, domestic sector in India, whether it's, you know, new brands, whether it's digital health, whether it's ed tech, whether it's agri-tech, and so on and so forth, but also this opening up of a vista of opportunities globally, right? You know, it's very interesting, Nishith, I'm sure you do this. You know, if you look at India's history, you go back 300 years, right? We were 25% of global GDP. A lot of that GDP was driven by exports.
Yeah.
Right? And I think what you're seeing now is after liberalization, starting first with IT services, then with pharmaceuticals, now with components, now you're seeing Indian startups, like what we call startups, really largely software driven, but increasingly it'll be also products building for the world, right? If you go back 4 years, Freshworks was the first Indian unicorn. Today there are about 18 Indian SaaS unicorns. Sorry, Freshworks was the first SaaS unicorn. Today there are about 18 of them. You know, we had no public SaaS companies. Today we have 3 or 4 public SaaS companies. Freshworks in NASDAQ, there's 3 or 4 of them here. There's no reason why India will have 100 SaaS unicorns by the end of the decade. There is no question whatsoever. Reason is very simple. The global SaaS market's 200 billion. We have 2% of that. Okay, so, and there's every reason to believe, and we've seen this, that India has a competitive advantage to build software products. We saw that in IT services. TCS is now 180 billion market cap. Infosys are over 100 billion market cap. We're going to see in so many different sub-segments of software, right? From vertical SaaS, application SaaS, developer tools, modern data stack, cybersecurity, infra, and the list just goes on. I mean, the kind of companies that, you know, we now have probably 6 or 7 categories where the #1 player globally in software, early categories, okay? Early categories. You look at API ecosystems.
Yeah.
It's Postman. There's no question. You look at a new category like, you know, data cataloging. It's Atlan. There's no question, right? Some of these are very early. Some of these are, companies that, have got some scale. They're not the established categories. So I think building software products across these categories is going to be, very, 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 very large, right? Much like IT services has created a $200 billion industry with one company that is well north of 100 billion market cap. There are now 5 that are between 50 and 100 billion market cap. I think we'll see that play out over 20 or 30 years in software. But actually, that's just the beginning, right? What we're seeing now, Nishith, is in many other categories, Indian companies, Indian startups are building global businesses, right? I'll pick one that's just in Bombay that we are fortunate to be investors called Skillmatics. Right. Skillmatics basically makes toys, okay? They launched 4 years ago. This year, they're now at a 300 crore run rate. This company has a 90% gross margin. Yeah. They're going to go public in 2026. What do? They make toys from Bombay for American consumers. They only used to sell on Amazon.com. Now they're going to launch on Target and Walmart. How did they get discovered by Target and Walmart? Because they were on Amazon.com, right? The first company to reach $100 million of revenue using Amazon.com from India to sell to US consumers. You know what they make, Nishith? Bed sheets. $100 million revenue bed sheet company that is profitable. The media loves to kind of drag on startups, saying like, where's the profits? Hey, profits are going to come,
top line.
But the bedsheet company profitable.
Yeah.
Skillmatics profitable. I give you so building consumer brands, I think, is another big space, right? And today we've seen Mamaearth has filed to go, public, etc. Obviously, new consumer brands in India will be big, but we do believe that building consumer brands for the world will become very, very interesting, right? And then you will see, I think, many, many other sectors. I don't know whether you know this. I'll give you a last stat before I finish this question. This year, India becomes the most populous nation in the world. Last year was China's first year where the population declined. Yeah. Here's an interesting data point. It's a forecast. It's not a data point. It was a forecast. By 2100, which is only 77 years from now, Nishith, India will have 1.54 billion people. Do you know what China's population will be? 772 million. So within 77 years, the Chinese population will be half of India's population. Japan, there'll be no young people left. They might be all Indian young people, but they aren't going to be Japanese, unless they dramatically come up with some new drug to increase the birth rate.
I know families in Japan.
Yeah,
they want to rent children.
Basically, in the next 70 years, everybody's freaking out because we have 40 Indian CEOs running globally. Actually, that's not the worry if you're the world. Every working human being could be Indian. Yeah. Because we'll have 1.5 billion Indian. No, it's like, it's a real data-driven thing.
This is really good one.
Yeah, no, but it's the data. I'm not making this shit up. It's like United Nations forecast. Yeah. So if the world population is 8 billion, the average age of a human in year 2100 is north of 40, and we've got 1.55 billion people. So actually, everything for the world could actually be Indian, not just Sundar Pichai and Satya Nadella. I mean, everybody could be Indian. So anyway, there you go. Long answer to your question.
This is the highest tech in the world, where you produce a product which cannot be manufactured in factories.
Quickly. The Chinese haven't figured it out yet. I think they're working on it. The whole genome, all that stuff.
I know. I think they would have all the AI driven.
Yeah. Genomics, I think that's the bet.
Exactly. But on a slightly serious note, you talked about unicorns. As a lawyer, I see. You talked about building companies, building products. Governance has become a little matter of concern. And would you have some words for them? Because we advise a lot of board and other people, but I think there is a craze to grow too big too fast. And sometimes they trip on that. Yeah. But it would be useful for people to hear out about the state of affairs on the
No, absolutely. Look, it's a great question.
Something,
it's a great question.
Look, give a piece of advice, whatever.
Look, I think the reality is, Nishith, as you know, right, to build world-class companies, which should be the only objective of any startup entrepreneur, you need world-class governance, right? You look at any world-class company in the world, the truly legendary companies globally, whether it's a Google or an Amazon or a Microsoft, or you look at India, companies like Infosys, etc., they have world-class governance, right? So the first thing to keep in mind is, I had Sanjeev Bikhchandani come and speak to a new search cohort last week. And Sanjeev says that InfoEdge market cap, I don't know how many of you know, InfoEdge is the most valuable tech company, tech startup outside of IT services today in India. Sanjeev says, and this is Sanjeev, 25% of their market cap is attributable to good governance.
Exactly.
The market basically gives you a premium because you have good governance, right? So I think world class requires great corporate governance. And I think in India, what we're seeing, Nishith, at least our view is, this is an ecosystem that has grown dramatically with unprecedented levels of capital, with lots of young and not so young founders who are seeing sort of this growth for the first time, right? And I think to keep in mind is, look, at the end of the day, founders have a responsibility and investors have a responsibility, right? From an investor standpoint, as Sequoia, as you know, some of our companies have been in the news for the wrong reasons. We are very clear. When we see wrongdoing, we will take action. Yeah. Okay? Fraud is not acceptable. And I think as investors, we have to obviously, you know, we are all working on putting in place the processes and so on and so forth. But at the end of the day, venture capital is a business of trust.
Yeah, absolutely.
Right? We don't control companies. We don't want to control companies. We are not the management team. We are on boards. We make investments. So I think it's a, you know, where we are as an ecosystem today, I'm hoping that I think everybody in the Indian and the Southeast Asia ecosystem understands that, you know, fraud will not be accepted, right? And I think one of the things that we have to take away from the minds of our founders is this concept of fake it till you make it. You know, there's this thing, right? I'm going to fake it till I make it. My numbers, I'll try to fake it till I make it. The problem is, if you get caught, you're toast.
Yeah, absolutely.
So fake it and toast is not a good thing. Right? So I think what we're, for instance, I think what we're doing, and I think a lot of firms are doing in the ecosystem, is from the very first time that you start a company, how do you make sure that you put in place the right set of processes, the governance systems, and then, for instance, right, once you raise by the time you raise a Series C, you should have an independent CFO. You need to have an audit committee by the time you're a Series C or Series D company, not pre-IPO. Everybody puts in an audit committee pre-IPO, but so, you know, we're trying to by stage of company put these things in place. But it is a very, very important issue. And I think thanks to some of the unfortunate events that have unfolded, it is now top of mind, I would say, for every investor, but it's also top of mind for founders. And I think, you know, we have to really get on top of this.
Yeah, and absolutely, I think governance is a part of OB, organizational behavior. And that really adds huge value to the company. So it's one of the major competitive advantage as well, apart from product. Just turning subject a little bit, have you seen profile of the LPs changing from time to time? At one point of time, you know, not tax exempt investors, other investors are coming now. You see different. We identified about 25 different categories of LPs now. But how have you seen the change, and anything that their expectations have undergone change? You know, I thought maybe.
Yeah, no, I think it's a great question. Look, so firstly, as Sequoia Capital, we only raise capital from not-for-profits. 90% of our capital comes from not-for-profits. So endowments, foundations, you know, MIT, Stanford, Wharton, etc. Foundations like Mayo Clinic, Rockefeller, and so on and so forth, and a few pension funds, right? California Pension Fund, Toronto Pension Fund, and so on. So that's just us. But I think if you look at it, if you look at the venture asset class, I'm not familiar with the private equity asset class, but if you look at the venture asset class, you have seen a dramatic increase in the type of LPs, right? I mean, sovereign wealth funds, very, very active all around the world. You've seen family offices emerge. In fact, it's amazing to see that, you know, a 2,000 crore fund can be raised in India only on Indian family offices, right? You know, so I think you've seen that. And you've also seen lots of HNIs, not just angels, right? You know, I moved to India, Nishith, in 2005. 2006, I joined the Indian Angel Network, which I think was the year it was started. You know, that year we had maybe like 30 angel investors. Today, just on Let's Venture, you have 6,000 active angel investors, right? So from HNIs who are angel investors to investing in funds to, you know, family officers to sovereign funds to, actually India, I don't know whether you know this, Nishith, the fund of funds that SIDBI manages is 10,000 crores. But today, if you look at the multiple corpuses that the government is funding to fund other funds, to create venture funds, it's 50,000 crores. There's 50,000 crores of Indian government capital, which is obviously coming from different sources, that is being funneled in. So I think the breadth or the diversity in the LP base has really increased dramatically.
I think a lot of new ideas are coming up, like we had worked on NIF.
That's right.
You know, And first of its kind private sector sovereign fund, which concept did not exist earlier, but now other countries are looking at it. We have seen a lot of, as you rightly said, family businesses in India are taking a lot of interest in this class of assets. Only difference I'm finding, family office is the first generation they're getting into this business. In Europe, we have seen a lot of family offices which have very different perspective. The third generation is not interested only in money, a lot of impact. That's right. Whereas here, I think obviously the return is becoming important and stuff like that, but that will also mature. But I see that family offices, I was in Dubai and Abu Dhabi and worked with them. Some of the family offices have become bigger than institutions. And therefore, family offices are also institutions by themselves now. And a lot of interest is happening. So we have a lot more sources of funding now. I think those funding winter, I think, is not really a great way to describe some shortage here and there, but I think how do you tap them? That's the only art. I don't know how much time do we have. Are we exceeding the time, or do we have any time left for questions? Because
maybe we'll take, shall we take two questions?
Since morning I've seen house full. I think your session is so interesting.
I think they came to see you because, you know, they never get to talk to you for
they
free.
want grey hair, but that's inside.
Okay, maybe we'll take, shall we take, Rajat, do we have 2 minutes? Shall we take two questions? I know we're running way over time, 20 minutes. So maybe, shall we take two questions?
Yeah, as many as long as my boss permits. Anything more after this? Only cricket match?
Yeah, and
So
I mean,
we can play
sunlight
here.
is still on, so we could theoretically go on for about 2 hours until the sun sets, but let's not do that.
So
okay.
we can play cricket here, right?
Yeah, right. Okay, let's, let anybody has any questions? Maybe we'll get a mic and see if, otherwise I know you have a long list of questions, we can go through those, but, yeah, go ahead. Here, there's a question up here. Can we get a mic in the front? Oh, there's a question back there. Okay, we can start in the back.
More and more hands are going up. Welcome.
Slowly, slowly. Okay, there we go.
Rajan and Nishith, those were great comments. I have a question, and perhaps both Rajan and Nishith Bhai can answer. And I don't mean to sort of specify any particular investment, but have there been any changes in the way Sequoia does due diligence? In the last 6 months or so, there have been various incidents that we're all aware of. And also, Nishith Bhai, to you, how would you look at governance when you're doing due diligence?
I'll start, and then you wanna add.
Okay.
Look, so as Sequoia, we have 3 kinds of diligences that we do. We do financial diligence, we do background diligence, and we do legal diligence, and that we've consistently done. I would say what we're doing now is we're just tightening down on those diligences. So, for instance, even a seed stage company, we would spend a lot of time on things like background. Even if you don't have any revenue, we might still do financial diligence. And things like that. So, so the processes are very much what we had before. And by the way, we use only Big Four for our the financial diligence that we do, right? And which actually is quite interesting. Even for a seed stage investment, we are using a Big Four to do financial diligence. But we are just tightening down on everything that we're doing. And we've also now, I think, especially over the last 18 months, as we've seen a couple of these situations come up. Now we know the 22 ways you could fake it till you make it. So we will evaluate all 22, and Harshal, our CFO, is here. He's looking for number 23 so that we can actually identify all 23 and then 24. So we are just going all out.
So as I mentioned, governance is a part of organizational behavior, basically a culture. And what I have learned over a period of time, culture alone can add at least 30% value to the organization. Okay. So if people consider culture or organizational behavior or governance as a part of value creation, I think that's an important part. Only thing is that you have to make 2 or 3 things clear. Number one, you have to make people and directors feel independent. Same person who may be independent in one particular environment may not be that independent. I'm just giving an example that in a small company, because you're a very important person, you can be very independent. if you're sitting in a meeting with Mr. Tata or somebody else, by the time you speak up something, you think 10 times. I'm not saying they've very well done it, but I'm saying it's the environment that makes you independent. So first principle for any company, and that's what I tell all the boards, that, just make people feel free to speak. Arthur Anderson, I am an ardent student of organizational behavior. And if you ask me those days, which unfortunately went down under, one of the big eight, it was most well known for its candidness. That created a lot of value in Anderson. Okay. So how do you create that environment where people are not afraid to speak up? Okay. Only thing is, how you speak is different, but what you speak should not be curtailed. So that's one important lesson that we need to learn. Second thing is that new issues that are coming up, we have to be agile. Cyber security, for example, we do a lot of work. It has become part of corporate governance, right? Number two, ESG, as I was talking to Jayant here, that you'll get a lot of funding if you create a good story on ESG. Very strong value creator, okay? But you can get into the hype, and then after you have to show something and you fake it, as you rightly say, it can put you in trouble. So new value creators, now in my assessment, 5 to 10 or 15 years from now, you know what will be the biggest value creator? Business in human rights, okay? Human rights is going to become an integral part of modern day slavery, and all those things are the concept that you will need to understand. So your behavior needs to change from now on. And in fact, there's a lot written in Europe also now. I have myself written some articles on human rights. So let me put it the other part. For example, a lot of cosmetic companies, for example, today, they should do, or even when the LPs invest, I think, how much supply chain assessment we do on human rights. For example, you invest in a, just light cosmetic company. Mica is significantly used in cosmetics, but mica mining uses child labor. How deep you go as an LP, how deep you go as a fund into the supply chain side. These are the new issues that we need to understand. There's nothing like perfect world, it will continue, but we need to draw attention of the companies and the newcomers that these are the issues that can really take you down. I'm not suggesting for a moment that you do everything by worrying about or, just fearfulness, but embrace these new changes which are going to come over a period of time. So governance is very important, and all of us have to play a role. And I think I can go on and on for the whole day, but today I have to stop.
Sounds good. Okay, great.
Thank
I
you
think
so
that's our
much.
signal. Thank you, everyone.
Thank you very much.
Thank you very much, Rajan. Rajan, a cap for you so that capital keeps coming in. Please think around that. Yeah. And Nishith Bhai, so that you cap the funds going out of India, slipping out of India. So thank you so much.